YouTube with the last pre-recorded one.
Oh my
I
gosh.
ran. I was like, oh, and I watched it, and I was like, oh, it came out pretty good. I was happy.
Oh my goodness. Now you're recording as well?
No, I'm not
Maybe.
recording.
Okay, I don't know who put the recording up. I wonder if it's Martha, but I have to record it because I've got to give it to our social media person so they can get it up there. Let me see. It'll allow. Okay, it looks like it will when the time comes. All right. All right. It's 9:04, so let's get ready. And I'll do a
Ready to go.
quick little intro and then it'll be you. Uh, wow. Good morning, everyone, and welcome to this morning's workshop, Understanding the Credit Game. And thank you to our speaker, Joe Llanes, owner of Citrus and Gold Credit Education and Repair Services, for presenting for the SBDC once again. My name is Leslie here at the Stony Brook Small Business Development Center, and we will be joined this morning by a few of our business advisors and admin staffers as well. For those of you who are not familiar with our services, the Small Business Development Center offers free, confidential, ongoing business counseling for a variety of businesses, startups, and established businesses as well. To make an appointment, call 631-632-9837, and I'll put our contact info into the chat as well. And speaking of the chat, please place your questions into the chat, and our speaker will field them as we go along. Now, let's turn this presentation over to Joe Llanes. Thank you.
Thank you, Leslie. Good morning, everybody. Like she mentioned, my name is Joseph Yanis. I have a company called Citrus and Gold Credit Restoration and Education. The point of this class today is to help people understand generally how credit works and how you can take an active role in managing it and setting yourself up or your kids for a better future by simply just understanding the rules of this game. I call it a game because it is like a game in a sense. And if you don't know how to play the game, obviously you're not going to be able to win it. So the whole goal here is to help everybody get in a position so they can win at this personal game of credit and credit reporting. I guess we're good to start right now, Les, right? So first, I'll tell you a little bit about myself. Again, my name is Joseph Yanis. What got me into this field of work is actually I started a construction company back in 2022, and through trying to get different things, whether it was insurance or bonding and so on, etc., I found out that my credit wasn't actually where I needed it to be. So, doing a little bit of research, or a lot of research actually, I kind of started to understand the rules of this game. And after, I don't know, like 6 to 8 months, I really got a good handle on it. I started repairing my own credit. I got myself in a position where I was much better off. Um, and then it turned out that everybody I knew basically was in the same boat. They all needed to fix something on their credit. Even if you think your credit is perfectly fine, most people take a look for the first time and they find things they didn't even know were there or they didn't know was a problem. And that's what happened with me. And I noticed it with my family and my friends. Little by little, everybody kept coming to me to ask for help. And as you know, the people or the number of people grew, I decided that I should focus into this field because I was pretty good at it, and I liked being able to help people get in a better position from themselves. Um, so ongoing, I'm still learning every day. I talk with lawyers, I talk with different people in the field, and every day I try to find better ways or new ways, not only to help people fix their credit, but like what works and what don't work. So that's where we're at now. Right now, we're helping a lot of people. I actually have a fair amount of clients at the moment, and 90% of them get the results they want. There is that 10% that expect a little more, a little quicker, but I have to explain to them, I don't have a magic wand. It is a time thing. It doesn't happen overnight. It does have to be persistent, meaning repairing derogatories on your credit and learning how to do it themselves. There's also have to be some skin in the game. You have to actively be a part of the process. It's not like I just do it and it gets done. I need to work hand in hand with people for them to help me get their credit where they need. That being said, next slide. First thing we're going to speak about is overall your credit score. Um, Basically, what makes up your score. So, as you see the graph in front of us. These are the five pieces that make up your credit score. The biggest part of that is your payment history, right? It makes up 35% of your score. Payment history obviously is whether you're late, on time, how many times you're late, and over how long, how many times you're late in a row. The more that happens, the worse it hurts your score, obviously. The second biggest piece of the pie is your utilization. Utilization is basically a statistic. It's how much available credit you have on all your revolving accounts, which is credit cards, and how much of a balance you have against that total credit limit. So if you have $1,000 limit on all your cards and you have $100 balance at statement date, you're using 10% of it, which is not bad. But so on, et cetera, down the line, if you have 550%, we're going to go into these more detailed specifically as we go. Uh, Next part of your score is determined by your length of credit. So as you get accounts, obviously over time they mature. After 5 years of an account being open with great payment history and good utilization, you're going to get more points for that mature account than you would get for an account that's, let's say, a year old or so. So the key is to over time keep everything perfect. It's not as easy as I'm saying it. It does take work, but that is the goal. The goal is to have good payments and good accounts that last over time. After 5 years, you really see a big difference in the amount of scores, the amount of points you get for your score. And it's also, if you do have a derogatory, it'll take off less points because you have such a good history with your length of credit. Next is your credit mix. Credit mix is the different kind of accounts that you have. Obviously, the main thing we're going to talk about is credit cards because that really does have a big factor more than anything else. But then you have student loans, personal loans, car loans, mortgages. What the banks want to see is that not only do you make payments on time and you're good with your credit cards, but they want to be able to see that you can manage all these things well. You want to have more than one type of account. Now that doesn't mean you go open five different types of accounts right away. All it means is over time, you're going to want to have more than one type of loan or card. It's not just about credit cards. They're going to look at all the different kind of lending that you're using. Last but not least is, well, actually, it's almost least 10%, new credit. So new credit, meaning every year or two, it's not a bad idea to open something new. That's how we build up the credit mix by adding different kinds of accounts. Sometimes we have more than one or two a year, sometimes it's less. But overall, you just want to make sure that as you go, you're strategically building new accounts. Those new accounts will give you a little bump in your points. And then over time, as the accounts mature, they'll turn into good point makers for you. And then at that point, it makes it even easier to get your next line or your next type of lending. all leading up to like the bigger purchases, like the cars and the mortgages, so on, etc., down the line. But these are your five major points. Payment history is number one, and that's what we're going to touch on first. All right, so payment history. First thing you want to do is you want to look up your credit report, right? If you've never seen it or you're not sure where you're at, you want to look up your report and you want to check each account and see what your payment history looks like. Just because you know that your payments have been on time, sometimes or every time, there's always errors on your credit report. That's why it's so important to take a peek at it. You want to check what your past payments look like and you want to verify that what they're posting is correct. Because, like I said, a lot of times it's not. They make errors. Those errors are what we use later to help you remove the problems because you're not supposed to have any errors. It's supposed to be 100% accurate as far as your credit report. Right. So you want to find out, do you have any late payments? How often? And which ones are they? Are they 30, 60, 90, or more days late? Um, The goal is to have no late payments. What I suggest is I tell people to put it on auto pay, and then because there are always errors here and there, not only have it on auto pay, but then double check that the actual payments are going through on the date when the auto pay is involved. Put it on the minimum auto pay just to make sure that you don't have any errors, and then check it on the day it's supposed to post to see if it's going to happen. That'll help you avoid late payments. The biggest problem with late payments is if it's on an open account, it's very hard to get the late payments off. So while the account's open, if you do incur a late payment and you get a derogatory or negative points, that is the hardest thing to have removed from your credit profile. So everybody knows that's like pay your bills on time, and that's the biggest part of your score. And it's the hardest thing to fix later. So very important payment history, number one. Anything in the chat, Leslie?
Well, there's just one from me, but I was waiting for everyone else. Uh, for the new credit portion, would a good strategy be to do my grocery shopping on my credit card and then pay it off completely at the end of the month or when the bill comes in, that sort of thing?
Yeah, that's not a bad deal. So the amount of money you spend on the card isn't necessarily gonna like make your score any bigger or better. Um, but the on-time payment will and the activity will. The biggest thing with credit cards these days, as we know, is you also have the perks that you get. So, if you have a travel perk or if you have a gas perk or whatever perk you have in the card, the more money you spend, you get more rewards, which is always nice. Um, but as whatever you use the card for, I always tell everybody make sure you pay it down that month all the way down to zero, because any balances left over are going to affect you negatively with the utilization number, which is the next thing we're going to talk about, your utilization and how those balances affect your score month to month. Does that answer you?
Yes, thank you very much. And we've got two other questions.
Yeah.
Joe Dotto would like to know if you're late on your payments, do they automatically notify the credit company?
Yes. If you're late on your payment, every month you have on your card, this is something we'll touch on and going down the line soon. What's called the statement date. So on your statement date, whatever lender you have is going to report your payment history on that date. So yes, if you have a late, they're going to show it pretty much the following month. You're going to see that late pop up um, every time. Sometimes they report it late when it's not as well. A little more rare, but it does happen. But if you're late, you're going to see it on the credit report, 100%.
And Marie would like to know because she's currently out of work and her student loans are in forbearance, how does this impact her credit during unemployment?
Well, if the student loans aren't reporting a late, then it shouldn't affect your credit score. Eventually, when You have to start paying them back. If they are late, then obviously it will. But the forbearance is going to hold off on any kind of late reporting for now. I'm not sure specifically, what you got going on and how long it's going to be like that. But if it does report late, the student loan, then yes, that's going to definitely be a problem for your credit report. 100%.
Okay, that seems to be all the questions for now. Thank you.
Perfect. We're going to move to utilization. So, like I mentioned, utilization is your total amount of credit on revolving accounts. Revolving accounts or credit cards, lines of credit, basically anything that's a every month you're able to spend and pay the bill, and it's like a revolving line of credit. With utilization, the more of a balance you have every month, you're going to see an increase or decrease in your score accordingly. So if you have a 10% utilization one month, and then the next month it goes to 50% utilization, you're going to see usually a pretty significant drop. It all depends on the statistic ratio, like the 100%, whether it's $1,000 or $10,000 is going to affect it. But what's going to happen is if your utilization goes up, your score drops. The good thing about that is once you're able to bring that utilization back down, you're pretty much going to see an increase back in your score and your points. It's nothing that you can't get over unless you are having a hard time bringing down that number, that balance. It's a nice way to be able to control your score. And it's also something that you got to consider when you look month to month at your score. You want to be able to say, okay, my score dropped 50 points. Why? Take a look and be like, okay, I have, X amount more dollars as a balance. So if by next month I need my score to go up for something I'm going for, whether it's a loan, a mortgage, a car, then you can focus on paying that down as much as you can to get your points back. The difference between that and a late payment is a late payment, it's not that easy. Utilization, there's plenty of times where people are going for a mortgage and I just look at the credit report and I'm like, okay, you need to be at X number. We need to spend this much paying your credit cards down, and we're going to get you to that number. As long as there's no new derogatories, no new lates or anything like that. So a good thing to do is first thing, look at your utilization and your balances. And if you can somehow bring those balances down, you'll be able to see the score increase, hopefully the way you need it. Like I have tools that I use that can basically predict, all right, you pay this down to zero, you'll get this amount of points. But that's something, if anybody was interested in checking out, they could call me on the side and I do that specifically for each person. It's never the same. Everybody has their own specific numbers. I would never be able to tell them without looking at the credit report. But I can show you guys how to do it and figure it out yourself. So month to month, that's the biggest way to control your credit score month to month. And sometimes, we live life, and sometimes in life we have to spend a little more than what we want, or we have emergencies that come up, and we just have to reasonably understand that when those balances are up, your score will go down. Just when it comes to utilization, that's something that's a lot easier to recover from rather than late payments. So it's always better to make those minimum payments rather than worry about the balances first. Always do the minimum payments, and then anything extra you can take down the balance with. That's always the best way because late payments aren't going to come back so easy. Any questions?
Well, Marie has one. It's a little complicated. I don't know. I'll read it out and you can tell me if you want to do it now or later. She
Okay.
says she has 80K access to credit on her credit cards. She moved 19K to one card with zero interest. All other cards are at zero. And she'd like to know, how does this affect utilization since the balances are no longer spread out over all of the cards?
Well, Basically, it's the same number, right? As far as it's the same number, it's still the same balance. So the utilization is going to be pretty much the same because you still have it's just the statistic of your total amount of available credit as to what the balances are, not really where they are. Which card. There are ways to boost your total balance, obviously getting new cards, but there's a few other ways too. So if it's a situation where you can't actually pay it down, but you wanted to change your utilization statistic by adding more total available credit to the list, there's ways to do that, but we could go back to that later if she still wants to touch back. But basically, it's not going to really change the utilization because the statistic of available credit to balances, unless it's a lower balance, it's not, or a higher balance, it's not going to change that percentage. Next slide is going to be your length of credit. Like we discussed earlier, length of credit is basically just how long your accounts are open. When you first open an account, you have a hard inquiry. The hard inquiry will take between 8 to 15 points away from your current score. Whether you get the card or not, or whether you get the loan or not, you're still going to lose those points for the hard inquiry. What's going to happen at that point is after the 30 days, sometimes 60 days, it depends. It will lag a little bit sometimes. You'll usually, with a new account, get a couple points more than that back. You usually get like 20 points, 15 to 20 points, depending on what you've removed because of the new account. Now, over time, as you make good payments and keep your balances low over time, you'll notice if you watch it that your score will go up even if every other statistic stays the same. It'll go up in small increments. It's not going to be like a 50-point increase in a couple months or anything like that. It'll probably be 20 after the first couple months of reporting, and then a few points depending on how many other accounts you have open after that. But the key is going to be is over years, literally years. It's going to be 5 years. Once an account reaches 5 years old and it's open, good payment history, low balances, you'll notice that you will have a higher score. And not only that, when you have any kind of derogatory or even a higher utilization, you'll lose less points because of that. It's basically as they mature, they become more valuable. It's like an asset, and it's going to help your score stay higher when you have problems, and also it's going to help your score go higher, um, no matter what. Once it hits that 5 year mark, you're basically maxed out with it. And then that's why at that point we look to do some new credit or a new line, because you want to stack on top of that. Now you have it perfect, but you still have to maintain, the good payment history and low utilization. But now if you want to boost your score more at that point, one of the ways to do that is new lines of credit after that. So remember, with the length of credit, over time, just keep yourself in good standing, make all those minimum payments, and don't close your accounts prematurely. Sometimes you have to, you want to. There's a lot of times people ask me, "Oh, I don't need this card anymore. Should I close it?" Usually I'll tell you no, because when you close that card, it's going to negatively affect your balance. Like, even if it's like a car loan, I have one person in particular who their car loan has ended and it was a lease, and they closed that account and they had like a 20-point dip, drop in their score. And for a minute, I was like, all right, no late payments, utilization's about the same, and I couldn't figure it out. They didn't tell me about the car loan closing, but I noticed it. I was like, oh, the car loan closed. I called them. They said, yeah, we're about to buy it, and the lease ended. And I was like, okay, so that was the reason for it. So even if it's a lease that you can't control that's closing, any closing of accounts is going to negatively affect your score. So just remember that it's temporary sometimes. It's not always like a giant point decrease. But it is important to remember that when you're trying to build towards a goal and you're on a time constraint, you want to make sure that right before your mortgage, you don't close a credit card or another line of credit thinking that you're helping yourself. You will see a dip. You want to keep the cards open as long as you can, even if you don't use them. Just let them stay open. Any questions on that one, Liz?
None at all.
Great. Okay, credit mix. Like we discussed earlier, your credit mix is the different kind of accounts that you have. So obviously we have a credit card. That's the most standard one. Um, just just for the sake of saying it, I do run into some clients that don't have any credit cards, and they still have a decent score. If you're in that position, it's always good, even if you get a small secured card. If you don't have any credit cards, it's a great idea to open a card because if you don't, then you're missing out on 30% of your point value. Like you could possibly have more points just for opening your account. You won't see it all right away, like we spoke about earlier. Um, but very, very big thing. If you don't have any credit cards, it would be a good idea to have at least one, even if it's a secured card. That would be better for people that don't have the highest score or might not get approved right away. Um, so with the credit mix, you'll notice that as you take on different types of loans, you're kind of reinforcing your credit profile. So if you just have credit cards for a few years and then you get yourself a small personal loan and then now you have a car loan and you're building up your credit over time to try to get to the bigger stuff like the mortgages, the more mix of accounts that you have, it's basically going to reinforce your credit profile, meaning even if you get a derogatory, if you have a all these other elements that are good, whether it's payment history, utilization, length of credit, and then your credit mix, it's going to be a little more fortified. Like it's going to take a derogatory will take away a little less from a person with a good credit mix and all the other good things that we just spoke about, as opposed to somebody that has one credit card and that's it. Once and then they get a derogatory on that. I've seen people with small, or I call it a thin credit profile, have one derogatory, hit them for 80 points. And then somebody that has a good credit mix with all the other good items that we talked about previously only hit them for 30, 40, sometimes 50, but not 80. So when you have a better credit mix, it's one more piece of the puzzle to fortify your credit score and make it less susceptible to larger drops for any accidental or even if you know it's going to happen, any derogatory things that go on. And that's usually a late. The late is the biggest thing. Utilization, it's not going to change the utilization. That'll always be the same statistic. But what you want to do is little by little, because you don't want to do 10 accounts in 1 year. You want to strategically pick what you're getting. If you have credit cards now, and maybe I've had some clients go get a small like $3,000 personal loan, and then over like after a couple months of paying that on time, that will help, like we discussed before, give them a new step up in their credit score because you will hit a point where you're going to plateau, and you're going to get the most available points and you're not going to be able to get any more unless you take on a different kind or a new account. Um, Personal loans, college loans, car loans, mortgages, lines of credit, all that stuff. If you do it strategically, don't just willy nilly start opening accounts because then you want to make sure you can manage them as they're opening. But credit mix, super important. But that's something that we do middle to end. At first, we just, as far as when I'm helping someone build their credit or repair their credit, that's something after we get where a plateau is, that now we start to see, okay, Next step is we plateaued. We can't really get any more points where we're at now. What else can we do? And usually a credit mix or some new account that you haven't had before is a great way to bolster that score and get that score to take the next step up. And then it's a repeated process of good payments, well, certain loans don't count for utilization, but the good payments um, will stack with your other accounts that you already have as long as they're in good standing. Everything has to stay good standing, paid on time. That's the goal. Questions, Leslie?
Yes, Joe has one. He says, are there any tips, any good tips on what to do or not to do when you're about to take out a mortgage?
All right, when you're about to take out a mortgage, 100% do not do any kind of hard inquiry. Do not try to attempt to get an extra credit card. Don't go buy a new car. Even if you have the money to do it, don't do it. Any new inquiries are not going to be helpful, especially if you get approved for it. Not good because you're going to be looking, or the mortgage people are going to be looking at like debt to income ratio. And if you change those numbers right before you get a mortgage, especially if they've already looked at it and maybe you're pre-approved, it's going to change everything. And I've had people do that, and not they didn't lose what they had, but they were like susceptible to maybe not getting the loan now because oh, they got a car, and it's like, why would you do that? Um, Also, the other thing is paying down your cards to literally zero if you can, because that again is going to affect the debt to income ratio, and that's something more for a mortgage specialist to get into in detail. But as far as on my end, those are things that I know that affect people negatively when they're going for a mortgage. Utilization number is really big. You definitely you want to have it under you want to have it at zero, but under 10%. I hear a lot of people mentioning to me, "Oh, 30%, that's the goal, right? 30%." 30% isn't bad, but lower is better. Zero is great. If you could have it at zero or 5%, that should be your goal. As far as anything else for the mortgages, yeah, don't open any new accounts. Keep the balances low, and of course, don't miss any payments on any open accounts that you have currently, because that'll hurt you more than either of the other two, I think. Um, yeah, definitely. Those are the three things. Make the payments on time, don't open new accounts, and get your balances as low as you can before you get the loan to go through.
Joe, while you're here on this credit mix, the last thing says don't open accounts you don't need. My question is, do loans, quote unquote, through Klarna and Uplift help or hurt in this process?
As far as the credit mix, any kind of loan, you know, loan, revolving credit, whatever it is, as long as you're not like doing it prematurely or in a position where you can't manage the payment, as long as you can manage the payment, it'll help your credit mix for sure because it's just a different type of loan. Um, I don't know if it's always going to be the best loan for whatever you're looking for, whether it's interest rate or accessibility to the money. But yeah, for credit mix, when you're ready for the loan, it's not going to hurt you unless you can't make the payments. So, but yeah, any kind of other lending other than what you have already, like a credit card or say if you have a credit card and a personal loan and you want to take on something else, if you're ready to do it and you can handle it, then yes, it'll help your credit mix. It's just a different kind of loan, and it's going to show the banks that you can manage different types of lending. You don't just do well with credit cards, but you can pay your personal loan, so on, etc. And when you go in the future for more lines of credit or a loan, they'll see that, hey, this person can manage their stuff. They're a safe bet, and it'll put you in a better position to get approved for whatever you're looking to get.
Thank you.
New credit, we'll touch on that one more time. So, opening new credit cards, not always the only thing that you want to do, but that's an easy way to get lines of credit or, new credit. The hard inquiries are something that you want to watch. You don't want to have too many hard inquiries when you go for even like we talked about before, when we're going for a mortgage or something, having too many hard inquiries is something they're going to look at. So a hard inquiry is when you put in to be approved for some kind of loan or line of credit, and when a lender sees that, if they see a lot of excessive hard inquiries, then whether you have the money or not, or everything else is good or not, sometimes it makes them think, okay, maybe this person doesn't have enough funds to live, so maybe they're applying for all these different lines of credit so that they can survive. Maybe, and that maybe is more towards, it leans the lender more to think most likely they're not going to be able to afford whatever they're doing because that's why they need these lines of credit. So when it comes to new credit, you want to do it strategically. You don't want to just try to open 10 cards. You want to focus on something nice and simple. Um, Whatever in particular it is, your personal loan, credit card. You don't want to do 10 of them at once, though. Just think about what you're looking for and go for a strategic hard inquiry. And usually I say like 2 to 4 hard inquiries a year is like where you should be. If the if the card doesn't go through, you can get those hard inquiries removed. It's not the easiest thing. It's not the hardest thing either, but you want to keep those to a minimum. So be strategic with your new lines of credit. Just don't open or attempt to open multiple things at once. Make sure you're like picking what you want to do according to what your needs are. Uh, Soft inquiries will just touch base. That's more something of when you're going for a job, that's a soft inquiry. There's simple things, those do not affect your credit score. So if it's not a line of credit, a soft inquiry would be like a credit monitoring service. They'll pull your credit, but it doesn't show as an inquiry because it's basically you using them to just check on your credit. And that's the same type of thing you'll get with a job or a landlord. Um, you want to not worry so much about the soft inquiries, but the hard inquiries you want to stay away from. And like we mentioned, how often? About like 2 to 4 a year is kind of like where you should be. And if you don't get approved for a line of credit and you pull the hard inquiry, you want to make sure before you go for another line of credit that you attempt or actually get the hard inquiry off that wasn't approved. And there's ways to do that. And if there's questions about that, I could field them, or you could just call me direct and I could tell you how to do it. It's not that complicated. But the new credit will help you, like I mentioned before, it'll give you a little bump after the first few months. And then it'll, over time, over doing everything like we discussed, the payment history, the length of credit, over time, those new credits are going to be the only way for you to up your score eventually. You're going to plateau, and then the new lines of credit or the new accounts are going to be the only way for you to up your numbers, if you will. Are we good to go on, Leslie?
We certainly are.
Very good. So this is my most popular question. So what should your credit score be, or what is a good credit score? So rule of thumb is 700 and up is a good credit score. That's a good goal. It's not the top of the line, it's not the best, but it is a good credit score. So 700 and up is kind of where you want to shoot for. Obviously, if you're looking for something, mortgage or a car loan or something where you're concerned about the interest rate, and how much you're going to spend over time, the higher is better, easier to get approved, lower interest rates. Uh, so here you can see in front of you the scale. Um, from 520 under, you're in rough shape, a lot of work to do. And as you progress up to the 700s, 700 to 740, those are where you start getting a better approval rate and a better interest rate. There are other factors that are involved in it, as far as like your income, if it's a mortgage or different things, but those are very specific. You want to try to stay at the 700 level. You're going to use your utilization. You're going to make sure your payment history is good. And if you find yourself at 700 and for a few months you're trying to up your score, but you look and it's like my utilization is zero, I don't have any debt, and my score isn't moving up or down, that's usually the times where we'll discuss doing like a new line of credit or some kind of new account to get off that plateau. Um, but about 700, that's where you want to be or higher. Anything higher, lower than 700, there's got to be something you could do, whether it's one of the things we spoke about before, utilization, a payment history, a derogatory. Once you find it, you want to try to get rid of whatever it is that's affecting you negatively. And if there's nothing there affecting you negatively, that's when we start to strategically think about something new so we can step up to the next level and score. Any questions on that one, Leslie?
Nope, not yet.
So here we could kind of see what your credit score cost you in the long run. Um, this is, in a sense, for a mortgage. So we're looking at the same loan, the same house, the same price. Where you'll start to see the numbers change is on the interest rate and how much over time a bad credit score can cost you. Um, so here we see 719 and under, between 720, 750, and then above 750, you can see the different rates. These are approximate. The rates are like moving around a lot lately, so can't say this is exactly um, for today's rates, but it's close. It's right about there. You can see with a less than 719 score, the total interest that you would pay on, or the first, the interest rate would be 8.16. Your monthly payment would be 32.51 and change. Your total interest paid on a 30-year mortgage, that's the number that we really want to look at. $734,000. Pretty big number. The next step up, 720 to 750, you can see the interest rate is lower, the monthly payment is a decent amount lower, and the interest also is a fair amount lower. Uh, it's nothing to sneeze at, about 100,000, a little more than that. For the same price, same house, same everything. It's just the score and the interest rate that's making this change. And on the last one, over 750, you have a great interest rate. Your monthly payment is way lower than either or, and you're saving yourself, a little over $200,000 over the course of 30 years, which is a lot of family vacations, nice stuff for the home in general that you could use instead of having to pay it because your score wasn't where it needed to be. These numbers do fluctuate, with the interest rates and stuff like that. This is just a good example to show you how much bad credit can cost you in the long run. Same thing, similar with a car or any other thing that you have that you're going to be taking a loan out for. So, best result is to get your score exactly like the best you can get it before you go for these loans. And to do that, it's a case by case scenario. Everybody's stuff is going to be different. I couldn't give everybody a one answer of exactly how they could achieve the score they need to achieve. Everybody has their own situations, but that's what we specialize in. And if anybody does need to take a peek and figure out where they can get some more points and get themselves in a better position, definitely give me a call and we'll go over your situation case by case. Any questions, Leslie?
No, there are not.
Very good. Okay, the credit bureaus. So the credit bureaus, that would be TransUnion, Experian, and Equifax. Uh, First thing I tell everybody when they sign up is remember you are not the client when it comes to the credit bureaus. You are the product. They're not there to serve you. The only thing that we have to check those credit bureaus is the Fair Credit Reporting Act. That's basically the law that they're governed by, and they're not there to give you a better score. They're kind of run by the bigger financial institutions, and it helps their end for you to not fix your credit, even if it's down to the simple point of it costs them money to investigate and change things. So even if they just don't investigate and don't change your credit score, that alone saves them money. Not to mention the fact that when you have a lower credit score, there's more opportunity for money to be made on their just on their end of everything because they are hand in hand with the lenders in most cases. Um, what they try to do is when we do the letters, the first thing that they want to do is they want to avoid doing work and spending money. So what they'll do is they'll send a lot of times what's called a stall letter. It's almost always verbatim the same letter. Hey, we see you're trying to fix your credit score. We understand, but we don't know if it's you. Meanwhile, you can send all the proper documents proving that it's you, but they'll always try to trick you, as it says right there. They'll trick you into thinking that it's not going to work or you're doing something wrong. And a lot of people just give up. So when I'm doing people's letters, first round, there's a good chance that you're going to get a stall. I have learned some procedures that make that less likely to happen, and it's actually they're working really good. But just keep that in mind. If you're trying to do it yourself or you get these stall letters, don't give up. There's a next step that you could do. We'll discuss that further along. Just don't give up. It takes time. It doesn't happen on one round of letters usually. Sometimes it does, but most likely not. Just be persistent when trying to fix your credit. It takes time, so don't expect a month or two away from getting a loan to fix everything. You're going to need at least 3 to 6 months if you have problems on your credit report. So the Fair Credit Reporting Act, that is a federal law, and basically there's a lot to it, but the gist of it, the most important thing is according to the Fair Credit Reporting Act, your credit report has to be 100% accurate. Not 99, not 98, 100%. So what that means to someone like me is every account that you have, there's roughly 22 lines of information about that account from opening date, close date, balance, high balance, limit, 22 altogether. And each bureau, all three of them, Equifax, TransUnion, Experian, they all have line items or information in these line items right down to capital letters. Each line for each bureau has to be exactly the same. If it says joint account and the word account, like specifically this happened this week, the word account has a capital in two of them and the other one is lowercase, that literally is grounds for them to have to either fix it or remove it. Usually when I write the letters, that's a minuscule thing and there's usually like between the three agencies and the 22 lines, I usually find 15 to 20 inaccuracies per account. And we try to take the most important ones and use those to send letters to ask them to fix it or remove the account. Um, Open accounts, we're going to try to fix it. Closed accounts that have a bunch of problems with them, we try to remove them. It's very specific to each person and each account. But knowing the Fair Credit Reporting Act helps us be able to gauge what we can do, whether we can get a late removed or we can get a bad account removed. It all depends on how accurate the reporting is. This is why it's important to see your credit report. But something like Credit Karma, which a lot of people bring to me and use, does not show any of those lines of information. Um, I do have other places that do, and that's what we use. So if you're on Credit Karma and you're trying to figure this stuff out, you're not going to see it. Anybody with a question on that can call me, and I could put you onto something that will show you better information to work with if you're trying to do it yourself. You want to make sure you run your credit once a month. Every month, something's going to change, whether it's your utilization, a derogatory, and like we said, there's going to be plenty of mistakes. Sometimes they'll mark something late that isn't necessarily late. And I do have a fair amount of clients where I'm just fixing mistakes like that, especially on like a mortgage or something. They have a great score, but they have one issue, and it does take time. So it's not a one-time fix and it's done. When you remove things off your credit, that does not mean you do not owe the debt. Just everybody realize that. Just because I remove something off or you remove something off your credit report, there's still a debt there. You could still be sued for that debt. Everything's very specific to different accounts, so on, etc. But I just want everybody to be clear. A lot of people ask me, oh, if I get it off my credit report, I don't owe the money. That's incorrect. Technically, you still owe the money. More information on that is something more for like a lawyer in some cases to talk about. But just always remember if you get it off your credit report, you still owe the money. In most cases, what I try to get people to do if they have collections or charge offs or any problems like that, I try to get them to get it off the credit report, and then it puts you in a better position for a settlement offer where you can pay less than the full value for the debt, which is always great. Spending less is almost as good as saving. But I just want to stress that just because it comes off your credit report doesn't mean you don't owe it. You could still get a summons, still go to court, and it could still come back. You could still have it put back on. Usually, if it's enough money, they'll make sure to put it back on just to put you in a position where you have to pay the debt because that's why they do it. As far as when you're dealing with settlements or if you have a bad account on your credit report and you're trying to get rid of it, a lot of people think, hey, I paid that. It shouldn't be there. It's 5 years ago I paid that old Verizon bill. And why is it still showing that I have, 15 lates because I didn't pay it for 15 months in a row? Just because you pay it doesn't mean they have to remove it. The only way we get it removed is by one, writing letters and finding inaccuracies where they have to remove it, and if you have a zero balance and you paid it off, then they're not going to report it again. But if you have an account that is paid and still showing up, or if you have an account that you're about to pay and you want it not to show up anymore, what I tell people to do is to get a pay to delete letter. That's something that I help people do sometimes if they're having a hard time or if they're not sure how to do it. Basically, all it is before you make the payment, they're going to send you a letter saying, hey, when you pay this, we're going to remove it from your credit report. And that puts you in a position where it's admissible in court if you need to go that far, um, just to force them to do what they're supposed to do. But they will not remove it on their own. They're not just going to say, oh, you paid it, let's get it off. That's your job to get it off. So just keep that in mind. You're going to find stuff from 10 years, 5 years ago, even if it's past statute of limitations, it's still reporting. The job is for you to look and you to take it off yourself. But that pay to delete letter is crucial if you want it to happen quick, especially if you're going for a house or something big. Always communicate through written mail only. A lot of people like to do the emails, stuff like that. In the fine print, when you sign up for Experian, TransUnion, or Equifax, there are some terms and conditions in there that you lose some of your rights as according to the Fair Credit Reporting Act. What you want to do is just go through the mail. The mail will be sent out. Certain times we're going to do certified return receipt because then you're going to actually have proof in your hand that they received it on this date. And then they can't say, oh, you never received it, so we couldn't do anything about it. And also, the mail is admissible in court for the extreme case where you need to go to court to fix something. There are extreme cases where that has to happen. But if you just have it through emails and stuff, the law isn't going to be applied the same, and they have a lot more leeway on what they can do and tell you if you correspond through anything other than the actual mail, like physical letters. And that's what we do. We set up letters to go out to them. And last but not least, like we talked about, TransUnion, Equifax, Experian, those are the three bureaus, and those are who we're going to be working with to get you where you need to be. Leslie, any questions?
Yes, as a matter of fact, we do. Let's back up a little bit. We have a really good one. How and where can someone obtain their credit report reliably and legally?
Okay, so there's quite a bit of places you can get your credit report. So, being that's the question, the first thing I'm going to say is there's different models of a credit report. Everybody knows a FICO. The FICO is what most lending institutions use for when you're going for the loan. The FICO is expensive compared to other methods. It's usually just to look at your credit report, it's about $50 a month. But that's something I want to just put out there first. There's the FICO, and then the other more popular one is the Vantage scoring system. And Vantage is what you'll find on Credit Karma and a few other monitoring sites. The difference is usually it's the 20 to 40 point difference from a Vantage to a FICO. So if you have a 680 on a Vantage, you could have a 7 to a 720 on your FICO. That's just something you have to consider um, when you're looking at the numbers. The difference in the two of them is the Vantage is half the price of a FICO monthly. So just that being said, that's just everybody understand that it's not just one rubric for the credit score. And there's a little discrepancies in the numbers, but if the Vantage goes up, the FICO's going up. If the Vantage goes down, the FICO's going down. It's just the numerical difference in the numbers is they're not going to exactly match up. That being said, um, there's a ton of them. You can go to freeannualcreditreport.com. That's one where you can, since COVID, every month you can get an updated credit score for free there. I like to use Smart Credit because it has a lot of like very simple tools where you can basically figure a lot of this stuff out yourself. You can like look at your utilization number. And that's one of my favorite things because as I'm repairing people's credit, I'm trying to show them how to do this, over time by themselves. Something like that is great. It has perfect tools where you can see, oh, your utilization, you pay X amount, you're going to get this many points back month to month. It's going to show you that. Um, Credit Karma is very simple. You could see the scores, you could see the accounts, but you don't get any of the detailed information. There's a ton of them. If you look around, you'll find a ton of them. But you could specifically the one that I mentioned, the Smart Credit, is probably my favorite. That's the one that I use. They have Identity IQ. There's a couple others, but Smart Credit I think is the best one. That's the one that I recommend while I'm working on credit because it's the easiest not only for me to work with and have all the information, but also teach people how to do it themselves because you can literally use the app to figure out a lot of this on your own. What else you got, Leslie?
Well, someone wants to know, can you please comment on the difference between a FICO score and a credit score? And also, she'd like to know what is the time frame for a later payment report removal from your credit report? She understands it as it being 2 years.
No, technically the late payments. So first thing is the difference between the FICO and what was the other one? The
Credit.
the FICO is just a scoring model for your credit score, right? So if I'm understanding, she wants to know the difference between your credit score and the FICO. Is that correct?
Yes, that was the first part. Yes.
Yeah, so the FICO is just a rubric. It's a model of how they get the numbers they get. So where the, you know, what number you get on a FICO is going to be different from what a Vantage is. So a credit score is just a credit score. There's different models of how to get that score, which is the two main ones are Vantage and FICO. Um, but the FICO is just the one that is like the industry standard for the most part. If you're going for a car loan, a mortgage, almost anything, they're going on your FICO score. Like I mentioned, there's also the Vantage, which is a cheaper model, but because of copyright reasons, they change the percentages just a tiny bit as far as what numbers they use to get to the number itself. Um, but it's still, if one goes up, the other goes up. If one goes down, the other goes down because it's pretty much parallel to each other. And your credit score is just basically it's a weather it's like a meter stick as far as how good you pay your debts. The FICO is just one scoring model, and that's the standard. That's going to be the one that you're going to have your mortgage looked up under a FICO. Does that answer the question?
I'll find out. She said something about the time frame for a later payment report removal. Is it 2 years?
So as far as your credit report will only show up to 2 years of your payment history. If it's past 2 years, your late payment, you'll still have the late marked. It'll never go away unless you get it removed. But you just won't be able to see it on your credit report because it only goes back up to 2 years. So you might not have it visible on the credit report where it comes to payment history. There'll be green, red, or black, depending on, how late or on time payments or late payments or a charge off. But after 2 years, you won't be able to see it anymore. And you'll have to actually, if you really want to know when it happened, you'll have to write a letter to the lender and ask them to send you the payment history. And they're supposed to do that if you request it. So it'll still stay there after 2 years. You just won't see it on your credit report, the actual month or date that it happened, but it will stay as a late.
Okay, the other question I have here, I don't understand it. You might. What is the fastest way to build from a zero?
If you have a zero, the fastest way, first thing, open a secured credit card. I've had people literally, no exaggeration, go from zero to a 700 or around a 700 simply by opening a credit card. And then it's not going to go much higher than that, but it can go lower if you miss a payment. But the easiest way to do it is open a small balance secured credit card. And then from there, then we start to grow from there. That's the easiest way to do it.
Right, that seems to be all the questions for now. We can continue.
Thank you. All right. So these, again, more good questions. Um, what can you do to get a better score? Obviously, the first thing you want to do is monitor your score or your credit profile. You want to be able to see month to month all this information that we're talking about: utilization, payment history, new accounts, errors. If there's errors on it, you want to be able to see that because if you're not looking, chances are there's going to be problems that you don't even know are there because you never looked. Um, if you're not going for any kind of line of credit or loan, I suggest that it's best to have everything frozen as far as your credit profile and Experian, TransUnion, Equifax. If you're not looking to do anything with your credit at the moment, lock it up. This way, nobody can get a line of credit or any kind of loan, including you. And all you would have to do is open that security freeze for a little bit of time if you're going car shopping or if you're going for a credit card. All you have to do is unlock it, and then if you do it right, you can unlock it for a few days and automatically let it get locked back up. But this will help you avoid fraud and people trying to get things in your name or using your information to open an account you don't even know about, which happens more than most people think. Uh, Another thing to help keep your score good or get a better score, put everything on auto pay minimum. This way, you're not going to miss a payment. It's still a good idea to check because sometimes I've seen auto pay not work the way it's supposed to, and somebody just put on auto pay, forgot about it, and it still went through as a late because it didn't go through, or the date changed because it was, for whatever reason on the card's end. But put on auto pay, pay attention to it. You just gotta like that's the main thing. You gotta pay attention to it, and make sure you make those payments on time. Again, if you don't have a credit card, begin building credit with a secured card. Like we said, if you have a zero, and that's what I find is the easiest way to get a nice bump in points. Uh, Most banks will offer them to you. You could get them at a bank, or you go to Capital One, or there's different ways to get them. Just find the card that fits you. A lot of the secured cards now have the perks. So, if you like the grocery perk or the gas perk or the travel perk, you can go and find that. And it's a low threshold. It's about $200 and up to open a secured card. The way that works is you put down a $200, they open you an account, send you a card with that $200 available credit. You make the payments, and usually in about 6 months, if you make all the payments on time, they give you back your $200 and you still have the line of credit. And then when I work with people, that's usually once they send you that money back, that's when we ask them to up the credit limit. And if that's something somebody wants to do. But that's an awesome way to do it. Secure credit cards are great for people starting out. Either use the card or don't use the card, or use it a little bit, just putting small recurring monthly payments on it. Your streaming services, even if it's something like car insurance, something that you know that you're going to have the money to pay every month in full, no matter what. You don't want to get a card and just max it out and then battle interest and battle paying it off. Whatever you put on these cards when you're first starting out, make sure you only put on what you're going to have money to pay when the, when the due date comes. So when your statement comes, you have the zero utilization and all the on-time payments. On-time payments are the biggest part. Uh, and like I just said, make sure to pay it off at the due date. So when your statement comes, it shows a zero or close to zero balance. If anybody is already in debt with credit cards, I like the snowball or the debt stacking uh, way to pay back. What that is, it's pretty simple. You put all your cards on minimum payment, and whatever card has the lowest balance, you take all your extra money after you figure out your budget and throw it at the lowest balance. Once you pay off that lowest balance card, you're going to take that same amount of extra money and apply it to the next card on the list, plus whatever the minimum payment is on that smallest card, you're going to add it to the pile of extra money. And as you stack up, you're going to have like, say, if you have five cards, once you get to the last two cards, you're going to have a considerable larger stack of funds to throw at that card and pay that balance down a little bit quicker rather than trying to like pay this that much and that this much and everybody gets $50 extra, but the balances are all staying the same. Um, it's called debt stacking or the snowball, and that's a great way if you're already in debt. You just have to figure out your budget, and depending on the amount of debt you have, it could be a little harder for some, but it's the best, easiest way if you have money, you're trying to work with a set budget. Another way to also get a better score is if you have family and friends, it's technically illegal to do it with people that aren't related to you. But if you could become an authorized user on a family member's card, that's somebody that you trust is going to make good payments, never miss. You want to find someone in this case, like I do it for my children. I basically, they don't even know, but they're authorized users on my cards. And my 16-year-old already has a credit score and he has no clue. But when he's 18 and he goes for a student loan or he wants to buy a car, I'm not going to pay for everything for him, but I'm going to set him up with a score where he'll be in a better position to spend less. And the same thing works for even if they're not your child. So if you have an aunt or an uncle or a parent or anybody you know that has, let's say, a card with a $10,000 limit and you're having utilization issues, they have a zero balance on a $10,000 limit and you only have $1,000 limit on all your cards. And even if you're maxed out, if you add that $10,000 to your total available credit, your utilization is going to drop because the statistic is going to totally change. You're going to go from like 100% utilization down to like 10% or whatever the case is. But that's a good way to help your credit. It's just you have to make sure that the person that you're authorized user on is responsible because if they get a late, you get a late. And and just remember you won't have the card, use the card, have access to the funds. You're just going to have access to the credit limit and the reporting value that that person brings to the table. Any questions, Leslie?
Yes, there are. Amanda would like to know, going back to the stacking the snowball, why would you not start with the largest balance?
Okay, so basically, if you start with the smallest amount, you're going to free up that card quicker because it takes less funds, obviously. So just like a batting average, just because that card is only $100 limit and your largest is $1,000 limit, once you clear up that card, it's still adding 100% utilization back to that card. So statistically, you're going to get a bigger bang for your buck first because you're going to be adding more positive points quicker. And also, as you like, if you try to attack a $10,000 card with $100 payment, it's going to take you forever. Like in some cases, years. But if you can knock down the smallest card and then take that minimum payment and add it and stack it to the next one, by the time you get up and you have a couple of cards, minimum payments plus your budget, you're going to have more money to throw at the bigger ones, knocking them down faster. You're still going to make minimum payments on all of them. But once you get that first card out, you'll see a good bump in credit score because you've now opened up that line of credit to 0% utilization, which statistically will change all the numbers because one's at zero, the rest are at 50 or 80 or whatever they're at. But if you're just knocking down a small amount off the largest card, you're not going to change your numbers that quickly. I'm hoping I explained it and made sense. It's kind of like a batting average. You get one home run is more valuable, than removing, um, a few bad. Instead of worrying about paying off that big one, you want to work up to it. You want to get the best bang for your buck. You're going to get that smallest one down to zero before you really put a dent in something that's much larger. I hope that explained it. It's just a matter of getting each card is worth a certain value. And once you knock one down to zero, you're going to get that point increase. Meanwhile, if you did it the other way, it would take you a lot longer to get those points because it's a lot longer to pay off the debt. I hope that makes sense.
Yes, she said yes, it did.
Do you have another one for me?
No, not at this time.
Okay, so things that are not a good idea. Um, First, do not communicate with any debt collectors, lenders, or the credit bureau through anything but the mail, like we discussed before. Um, just for the simple fact that the Fair Credit Reporting Act is your weapon. That is what you can use to make them do what you want as long as it falls into the law. But once you start doing it outside the postal service or the mail, then it changes the rules because, like I said, terms and conditions on websites, they can make it so that you're not able to use certain things in your favor that you should be able to otherwise. And then also, if you're on the phone with, let's just say you're on a phone with somebody and they say, yeah, you pay this debt and we'll get it off your credit report. And you're like, all right, here's the payment. And you hang up the phone, there's no way to guarantee that they're going to take that off. And if they don't take it off your credit report and it's still hurting you, there's no proof that you have to show that they should have. So you can't go after them to make them do it. Everything through the mail has the postage mark and it's covered through the Fair Credit Reporting Act, basically, that you can bring it to court to make them do it in the extreme circumstance where they don't do the right thing, which most of the time they don't, tell you the truth. So main thing, everything through the mail. If a debt collector calls you on the phone, hey, we want to learn this debt, da da da, be like anything you have, send to the address on file and hang up. Don't tell them the name. Don't give them a phone number. Don't tell them the address. If they don't have the right address on file, then they can't send you the information, and then they can't send you the summons, and they can't down the line. So everything through the mail. Don't talk to people on the phone. Biggest thing is debt collectors calling you because then it's a collection and then it's something different. And you just always tell them the same thing. Any information about this file or about this debt, you can send to the address on file. Please don't call me anymore. Everything should be done through the mail. And technically, they're supposed to not call you if you ask and you tell them to send it through the mail. But then in the mail, then you can respond and back and forth on paper and control what is said and what is given out. It's the biggest thing. Everything through the mail. Um, like we said, some of your rights are given up when you communicate other than the mail, and keep it simple. Just let them know you want anything on this file. Send to the address that they already have. Don't give them an address. Don't give them a phone number. It's their job to have that stuff. And if they don't, it works in your favor. So, any more questions on that, you can definitely give me a call and I'll. It's pretty simple though. Do not apply for any kind of credit card or loan during the process of repairing your credit. The exception is if you don't have any credit currently, but if you're working with me, we're going to make a plan for all of that. We're going to strategically help you build these accounts, build your profile to something that, even if it isn't the score you want at the moment, we're going to get you the best results for what you have available. And if we need to do more, we're going to look at that and make sure that you take that action and get you where you need to be. And if you have a score below 700, I wouldn't suggest going for any cards or regular cards or loans. Um, it's always best to try to get to 700, especially if it's a loan. A card, we go case by case, depending if you need it, not need it to survive, but need it to build your profile. But as far as the loans, anything below 700, you're going to get a subpar lender and you're going to pay a lot more in interest, a lot more for your vehicle, your house, or whatever it is. It's going to cost you a lot more money. So spend less. Make sure when you get some kind of loan, you're at or above 700. Anything else, Leslie?
Oh, yes, we do. As one of the attendees said, that your idea of only doing this by the mail also eliminates scamming.
100%.
And someone
100%.
asks, what about recording a telephone conversation? How does that work? And
Well, that's state to state is different. New York State, I know for a fact, is a one-party consent. So they always record the conversation. But the funny thing is, when the conversation they record is in your favor, you never hear about it again. They don't supply it. Recording a conversation, the only problem with that is if you record a conversation and you're planning on using that for something like court or something like that, you can't take an excerpt of that conversation and say, here, look, they said this. You got to present the whole conversation. And there's always a likely chance, because we're not lawyers, that you're going to say something that is going to not help your cause. With letters, you are specifically controlling the language 100%. The biggest problem you could have with that is by writing something incorrect in the letter. But that's my business. That's what I do. I know how to put the letters together. And you could always have a lawyer or somebody else check it out. But a telephone conversation, you could say something like off topic or that just I wouldn't recommend it. You could always record conversations depending on your state law if you're allowed one party consent. But the mail, you have total control of what you say. And I just think that's the simplest, smartest way to go.
Okay, thank you.
That's it on those questions.
Well, he's got a really interesting one here that just popped up. What about going into a new business venture with a good credit and a zero? What is your best advice to go ahead with this venture?
Okay, so we're talking about a zero as far as a zero credit score.
He says yes.
Okay, so there are two different kinds of credit. Obviously, there's personal credit and business credit. When you're in a new business venture, obviously there's no history or bank account history for the business to work with. They're two different things. The business credit, personal credit, two different things. If you have a zero score and you're opening a new business, you're going to be considered what's called a personal guarantor if you get approved for any kind of loan, business or personal. The most important thing is to get your score and your profile built up to a point where you're at about a 700, and that takes time. That wouldn't be something that you'd be able to do overnight. It would take you like 6 months, 3 to 6 months just to start reporting and get things moving. As far as the business end of it, that's a totally separate topic, totally separate way business credit works as opposed to personal credit. There are trade lines and certain accounts that have to be opened, bank accounts that have to be opened, showing money going through them. And this takes time. That's more of like a year-long process of knowing what kind of accounts to open. But before you could even get to that point in that first year, your personal credit will have to be the guarantor before you'll get yourself set up properly to accept business credit. First thing, you have to get reporting business credit. You have to get a DUNS number, so on, etc. But that's a whole nother topic. That's something we're working on putting a class together for. Um, but it's kind of off topic. I don't want to like confuse people. Just business credit is a whole different animal, and it's totally different process. There's X amount of accounts you have to have open, lines of credit, bank accounts, and before you even report a score, literally.
Okay,
Hope that answers your question.
and Amber, I think he just answered your second question. Amber's other first question is regarding telling creditors to mail to the address on file. What if the address on file is incorrect due to moving? The debts are still in her name and she'd have no way of getting the necessary documentation. What's the best way to update details without putting herself in a scammer situation?
As far as so there's different kinds of situations of the debt. So if you have a debt, right, and it's a collection, let's say, because now it's a bad debt, and you owe a balance. The whole strategy to sending it to the address on file is when you apply for that loan, that address is tied to that account. Even if you move, they don't update that specific file with the new address. When you look at your credit report, there's a section for personal information. Whatever, like, say if I'm a car salesman and I put in your name and I misspell it and I put in an address that you used to live at, that's going to be on your credit report. Those are one of the errors that most people find that they don't even know are there. Anytime you put new information on your credit report, like a new address, it'll be posted to your credit report, but whoever is trying to do the collections is going to have to actually look up your credit report to find other addresses and do the work to find that. If you have an old address that they're trying to send the mail to, not only can they not send you the bill, which um, I can't remember the exact name of the law at the moment, but it's basically if they don't send you a bill, I believe it's 21 days before it's due, like physically in the mail, technically you're not responsible for it. And then on top of that, if they're trying to bring you to court and they don't have an updated address and they're sending it to the wrong place, reasonably, you don't have to be there because you're not getting the summons, you're not getting the paperwork. But it's their responsibility to have that information. So you don't want to call up your old lenders and say, hey, I got a new address, send me all my debts here, unless you want to pay every debt, you know. But if they can't find you and send you anything through the mail, you don't have to respond. And that's the simple reason why we say send it to the address on file and don't give them the information because that's their responsibility and their job. Um, your job isn't to go and call every loan person you ever had and update your information. They either know it or they don't, and they can collect it or they can't. That's a simple way to say it.
But is her credit score still impacted?
Is your credit score still impacted?
Well,
Um, as far as if they're trying to get you to pay a debt and they're sending you stuff in the mail, if you have something in collections, there is nothing more that that account can do to hurt you. That account is hurting you as much as it can. The account is closed. It's in collection or charge off. It shouldn't be accumulating any new lates. It basically took as much as it can from you, and you won't recover those points until it is removed. But if it's already a collection or a charge off, it's not going to hurt you any further because they can't accumulate new lates to a closed account, if that makes sense.
now someone else is asking an interesting question as well. Do your personal and business credit scores commingle at any point, or are they completely separate? For instance, if you were late on a payment for a business credit, would it affect her personal credit?
In the beginning of building business credit, yes, because you're considered what's called a personal guarantor. And even getting the business loan is going to be accredited to what your personal profile says. But there is a point where it usually takes a few years. But yes, there is a point where you are able to receive lines of credit and loans strictly in the business name, nothing tied to your personal, but that doesn't happen overnight. That's something that takes a few years to get to that point. Um, Anything you do in the first like 5 years of your business, usually, sometimes less, is tied to your personal account. And if your a personal account is tied to it, then you're like an authorized user. And yes, the two will affect each other. But once you graduate and get your personal guarantor out of the way and it's just for the business, they won't be tied together. But you're going to have a separate business address. You're going to have like 7 accounts of trade lines, plus lines of credit, plus. Again, that's a bigger, different topic, but they do intermingle in the beginning. But once you can transfer the personal guarantor away from any of the business loans, if you would get approved without your name on it, at that point, it doesn't affect your personal anymore. Hope
Okay.
that makes sense.
Well, why don't you continue? And then if there are any toward the end, because we're at 10:30.
I'll be ready. Wow, time flies when you're having fun.
Yes.
Okay, so statement date. Real quick, I'll speed it up a little bit because we're running over a little bit. So there's a difference between your due date and a statement date. Your due date is the day that your payment is due, as we know. Your statement date is the date that they report your information to the credit bureau. So if you have a due date of the 22nd and your statement date is the 25th, you still have to pay by the 22nd. But say you pay the 22nd and everything's down to zero, and then before the 25th, you rack up a new balance. On the 25th, they're going to report whatever balance you have. So in some cases, that's why people be like, "Hey, I paid that bill. I don't understand why they're showing I have a balance. I paid the bill, and then I did use the card again, but I paid the bill to zero on the due date. Whatever it shows for statement date, it's going to stay that way for 30 days. So you want to make sure that if you're doing something like bringing utilization to zero to get your points up, you want to make sure it stays at zero until the statement date. You can find your statement date on your bills. Usually it'll say statement date. Sometimes it'll be highlighted in red, but it's different from your due date. And whatever date your statement date is for 1 month, like if it's the 25th, it's going to always be the 25th every month. That's going to be the day that each card is going to have a different statement date. And that's kind of what you want to pay attention to when you're at the nitty gritty trying to figure out utilization. You want to make sure that your card is at zero until that statement date or close to it. Because once you start using it again, it's going to pull points off if on statement date you have a higher balance than what you expected. But that's a different statement date. That's what's going to show for 30 days. And you're not going to be able to change that until the next statement date. Even if on the due date, you pay it off to zero. If you have a statement date that shows that you have a balance, that's going to be it until the next statement date, regardless of what you pay on the due date. All right, so debt consolidation. This is one thing that I have to touch on because a lot of people that I deal with, they come to me from a debt consolidation company. Uh, so the way debt consolidation works is a debt consolidation company will take all your credit cards that have balances. They're going to make, they're basically going to take control of those cards and they're not going to make payment. They're going to let those things go into charge off, then into collections. Meanwhile, they're going to collect money from you and put it to the side and collect fees. At the end of the debt consolidation, basically what they're looking for is the lenders to call them and say, "Hey, we'll take a settlement of less than your full amount." They're going to take the money that you've been putting aside and paying them to pay off those existing debts at the lowest price possible. And long story short, is they're going to, in the process, destroy your credit. They're gonna they're gonna basically let all these accounts go into charge off, then into collections. You're gonna lose a lot of points on your credit score. And then when they're done, they might get you to pay less than the full amount, but that's all they're gonna do. You're still going to have all these negative accounts that accumulated all these lates, and then you're going to be left holding the bag of your bad credit score. But now you might not have paid the full amount for these debts, but a lot of the times that's when people come to me and they didn't really understand that that was going on. All they know is their credit score went down and they paid off their debts for less than the full amount. And then that's where I come in. I usually start repairing or removing those bad accounts that were paid off to zero. Like I said before, just because I get it off your report, it doesn't mean you don't owe the debt. But once you make a settlement, in this case with a debt consolidation company, and the balance is zero, if I could get it off after that, then yes, then they won't repost it because the debt is now satisfied, even though it's for less. So anybody dealing with debt consolidation companies, just be aware that your score is going to tank. And if you deal with them, you'll know that they tell you it takes 3 to 5 years to get to the point where it's all completed. Um, Kind of a rough situation. It's not really the most ideal way to deal with with your debt. It hurts for a long time. um, so the way I like to work it, um, I don't ever tell anybody to not pay their open accounts. I do not put people on purpose into charge off or collections. The only way that I'll work with somebody that has debts like these, or if they're already a charge off or already a collection, um, what I do at that point is I go over the client with their budget, how much money they have, what their goals are. And then on the stuff that's already charged off or collections, I can call with the client and basically do the same process of negotiating a less than the full amount settlement. But again, I'm not going to put you into the negative of collections or charge offs. That's going to be something pre existing, whether a debt consolidation company did it and you didn't realize, or it just happened naturally, and then we can do it. Um, and all we do is we mediate the amount. I usually start with, hey, we'll offer you 30%. 90% of the time, they're like, no, we'll take 50%. And then a lot of times that helps because if it's $20,000 debt and you're only paying 10,000, and then immediately right after I get the settlement or you get your own settlement, then we remove the accounts. And again, it's not overnight. Could take 3 to 6 months to get the accounts off, even at a zero balance. Um, but that that is the difference between what I do and what a debt consolidation company does. Um, if there's accounts that aren't in charge off mode, I'll go over your budget and your goals again, and I'll either help you make a payment strategy to keep the accounts open and in good standing, or sometimes we can close the accounts and claim a hardship, and either get rid of the interest so it doesn't incur any more interest, or even do a settlement offer at that point. But either way, that account will have to get closed. Um, it's not going to affect your scores badly if we do it that way. The closing of the account will hurt your score a little bit, but it is way better than accumulating 180 days late, then a charge off, then a collection. You're talking like 50 to 80 points per account up into a certain point where you're at a 450, and then you can't really get much lower than that. But it's just a bigger hole to dig out of later. And then, like I said, then we work on removing these negative accounts and getting your score back where it needs to be and rebuilding it. I'm going to keep going, Leslie, and we'll get any questions at the end.
Yes. Thank you.
Again, this is the difference of what I do. I'll let you guys look over it real quick. Um, Debt consolidation, it takes 3 to 5 years. With us, as long as we have a budget to work with and there's already accounts that we could work on, 3 to 6 months, sometimes less than that. It's really how quick you're ready with the funds to make these settlement offers. The debt consolidation, it's going to take years, and then it's going to take years or at least a year after that to fix whatever damage has been done. Um, We like to work with people before they go into charge off or collection. We like to help them work out payment plans or, in some cases, close accounts. Debt consolidation is going to put you into the charge off collections and then wait for them to call them to offer a settlement, which could take a long time. Um, we offer classes, clients, and to the public to improve your spending habits before, during, and after the process. Some companies will offer budget monitoring, but usually it's your problem and they expect you to fix it on your own. I'm not going to go into the fees and stuff like that, but we do work with people for their goals, and I don't do anything that is going to put you in a worse situation. Whatever we work on together, we're going to try to ease the pain and make the time shorter that you're in the problem. Um, it's in my eyes, it's a way more ethical way to do it. Just between the fees that the consolidations will charge, there's maintenance fees, monthly fees, plus they whatever they save you, they're taking a percentage of that on top, so you're really saving not as much as what they want you to see. When you make that payment to the lender, because they're adding a good chunk of that back. But if you need help with that, that's something you can call me and touch base. Okay, so what to do now if you've never had credit before? One, always look up your credit report. Make a budget for your finances, begin building a savings. Open a secured card is usually the first thing if you don't have any credit, and then start building your credit. Continue with the credit building steps for 6 months and until you have a 700. If you find yourself plateauing, you don't have to pay me for a phone call and a question. As long as I have access to the credit report, I give people free consultations and we help people work on stuff. So feel free to give me a call and I'll get right back to you. Uh, so if you have credit issues, again, always first thing, look up your credit report. Highlight the stuff that's inaccurate. That's something that I do, and I send to you on a free consultation. I give you a full credit report with all the errors highlighted. So if you want to try to do this on your own, all you need is my consultation, and all the line items that are incorrect are going to be highlighted in red, and I'm going to email them to you before anything else happens. And then we're going to have a consult. I'm going to explain that to you and you'll have all the ammunition you need to try to do it on your own. Again, you're going to use the highlighted information that I provide to write letters of your own. You'll just have to research how to do it. It's a little tricky, but you can figure it out if you work at it enough. Uh, if they send you proof, then you can work with them for a pay to delete. If they send you proof of a debt that you know that you incurred, the best thing to do is try to work a pay to delete. Hey, I'll pay it, but take it off my credit. Otherwise, you could pay it and it'll still stay on your credit report and hurt you. Um, it'll just be a process of getting it off after it's paid off to zero. Uh, Continue knocking out these lines of credit, saving money in high interest accounts, and writing letters until your score is at a 700 and start rebuilding your credit after we get rid of all these derogatories. And that concludes the most of it. If there's any more questions, Leslie, we could take them now. And sorry about going over the time. I hope everybody found this informative and it helps you. And thanks
No,
for being here.
thank you very much for sticking with us for this amount of time. I know it's past what we asked you to stay. I'm going to stop recording, and we do have a few other questions. We have someone, and I think I'm going to have him unmute after we. Oh dear. I think we're going to have Marie and this gentleman unmute, and we're going to start with Amber. Amber, would you please unmute and go back to your original question where I said we're going to do this afterwards?
Hi. Yes. Thank you. So I was trying to clarify because I know you said that, like, if it's on your credit report, then, you know, if they can't mail you, blah, blah, blah. But for me, that doesn't make sense because if I have an account in collections and it's closed, my score is impacted. This is literally happening now. I understand it can't hurt me worse than it already has, but it continues to limit what I can do because it shows up on my credit report as a closed account that's in collections. So, since I'm working to build my credit score back up, it doesn't make sense that I would ignore closed accounts that are impacting me, even if they don't have my mailing address. So, I would need to contact them to rectify the debt to get that off of my report, correct? Otherwise, nothing I do will boost my score and I'm continuing to be limited.
So the difference in what we would do is so when we go to get this off of your credit report itself, we're
Mhm.
contacting the credit bureaus, not necessarily the lender right off the bat.
Okay.
So when we contact the credit bureaus through these letters, we're going to find the errors on that account. We're going to find X amount of errors on one account and present that to the credit bureaus, not the lender itself.
Okay.
The lender, we'd only contact them later if the bureaus refuse to remove it and we find reasons um, that they should be removing it and we want to verify that information. It could be 100 different things, really. It could be more than one thing. But we're not going directly to the lender to remove it from the credit report. We're going to the credit reporting agencies, all three of them, and having it removed on inaccuracies and incorrect information, not involving the lender, just getting it off the report itself. You understand what I mean?
Right. But
If
it's
if there's a balance on the closed or collection, they might, if we get it off, they might put it back on. But that's why in some cases it's best to work a settlement, pay to delete, or just pay it off and then remove it. But if you're in a short term looking to go get a mortgage, like I do this all the time, um, we can get it off for a month or two and your scores bump up and that derogatory is off. You could get your pre-approval for, say, a mortgage or a car, and then you have the loan. It's yours with the interest rate that you wanted. And if it does go back on, yes, we don't want it to go back on, but if you don't have the funds to pay the balance, and we just want to get a temporary bump in score so we can get a better interest rate and spend less, that's the difference. We're not going after the lender to get it off the credit report. We're going after the three agencies that necessarily don't talk to each other or the lender.
okay. And this applies, sorry to keep adding to this, but this
Oh,
applies.
no, this is awesome. Good.
Okay, thank you. This applies if I'm not trying to get a loan, a car loan, a house, or anything like that. I'm literally just trying to like rebuild my credit and repair it. So I'm not aiming to get like a short term boost. I'm trying to eliminate this altogether.
So the best thing I could say, it's really 100% case by case. Like everybody's
Okay.
profile is a little different. The situations are all different. If you wanted to contact me later in the day when you have free time, I offer free consultations and free audit. So basically, if you provide me the credit report, I'll look everything over, give you a simple audit and then a detailed audit with all the errors marked. So you could even do it yourself later if you wanted. Then
Okay.
I'll tell you my plan that I think is going to help you out specifically. And there's no cost to that. The only time there's a cost incurred is when I physically write letters, send them to you to print and send. So if it's something that
I
you wanted
absolutely
like
want that.
100% answers to, it
Yeah.
probably best to let me like look at it, give you a free consult, and then I could tell you specifically what I would do for your situation.
Okay. Last question. Where's your contact info?
Go to the top. So this is my number, and I think Leslie has the website posted inside the chat. I'm not sure.
Thank you.
We'll get everyone your the link to your website sent to them after the workshop.
Okay. And simplest thing, that is my cell phone. So you need to talk to me, that's a direct link. You could text it. You could leave me a message. Usually within 24 hours, I'm if you give me your credit report within 24 hours, the audit is done and I'm on the phone with you according to your schedule. So it's nice, quick, easy, and yeah, simplest way. Phone call, even a website. You go to the website, you can put your lead information in there, and that will go on to my client portal. And
Mhm.
I check that daily. Usually, within 24 hours, we're on the phone.
Okay. Thank you so much. Thank you both.
Yeah, hopefully, give me a shot. I'll help you out, and we'll see where we can get you to a position to help yourself. And if you need a little extra help, you let me know, and we'll work it out.
Okay. Okay. Thank you.
Thank you.
Oh my goodness, Joe. We have two more people, and one of them is really, really extensive. But Marie, can we start with yours? Because yours, I think, is going to be very short. Marie Laudacio, yeah, Laudicio, are you still on the call?
Hey, Marie. She might just be muted, maybe. Or it looks like she's off mute.
Uh, no, I still see her on there. But and she's unmuted. She must be having trouble. Well, oh, wait a second. Oh, she is talking, but Marie, we can't hear you, so I'll go ahead and I'll read your question. Let's see. Oh, does owing the IRS over 30K have an impact? It's not noted on her credit score, but she was wondering how tax balances affect the credit. And companies that mention they can get your balance down to pennies on the dollar, are they scams? And what's the catch?
As far as like anything owed to the IRS, that doesn't necessarily affect your score unless or until it becomes a judgment, because a judgment will show up on your credit score. But just owing the IRS necessarily isn't going to show on your credit profile until it becomes a judgment. And that's a whole nother ball of wax. But just owing them money, it doesn't show up right away. Um, and until the courts give them a judgment, it's not going to show up at all. It shouldn't affect you. And as far as the pennies on the dollar thing, I don't trust them specifically, but I'm sure there are some good places that can help people, but I wouldn't really feel comfortable telling you that it's good or bad. Um, if anything, you want to talk to a CPA, you want to talk to an accountant that you trust. And I do have accountants that we use that you could ask that question to, but I don't think that's the best thing for me to like comment on. I'm very skeptical too, so I understand why that's a question. Um, but you could always contact me, and I do have an accountant, more than one accountant that I can refer to, and that would be the best person to ask that question.
She says she is talking to a CPA. She's waiting for results, and he's reviewing everything. Thank you.
Yeah, the accountant's the best one that's going to put you in the right direction. That's legit. There's a lot of different companies out there that say a lot and promise a lot, and a lot of people get burned. Even the credit repair industry, for me, it's a constant fight of trying to show people that a lot of times credit repair companies, they don't do what they're supposed to do or say to do, and it gives me a bad look because I have to like prove otherwise because a lot of people have a bad taste or hear a bad story. But there are some good people out there. I like to be one of those, but I can't speak on to other companies. Ask the CPA, and if you have any more questions and they don't answer it, you could always ask me, and I could put you in touch with someone that I trust. Um, and they're used to dealing with those questions because I send a lot of people to them, honestly.
And also, Jay Beanie, I would like very much to distill your question down so that we can end, and you will have Joe's contact number so that you could go into deeper detail. But he's working along with his brother, and his brother was just diagnosed with ALS. And how does that work against your credit debt? Because he's not able, he went from having being a very high earner, and now he's down to something way, way, way lower. So it's going to affect his ability to pay his debts. How does this affect your credit score?
So I'm assuming that there are loans and lines of credit that you have the responsibility of paying that you can't meet the obligation because of the difference in your income.
Right there in business.
Um, I think that's where the question is leading.
Yes,
If I could just get confirmation.
yes, they are in business together. And Jay Beanie, go ahead and unmute, and we'll just try to distill it down.
Don't give me too much
Hi.
personal information. I don't
Sure,
want
no
too much
problem.
personal information in the forum.
Sure,
Because there's other people here. But yeah,
absolutely.
let's see if we can give you something.
Sure. Well, thank you for this class. I really appreciate it, or this meeting. It's an
My
honor, really.
pleasure.
And thank you also, Stony Brook, for hosting it. Me as an outside, not going to the school, it was really nice to be able to, sign up for all of them. So thank you for your time. Much appreciated. My question is just, my brother was diagnosed with ALS. When it comes to his early bills, I've been trying to negotiate and, put things down. But my question is more, are there any resources for people that have an illness, a terminal illness, that's going to, prevent them from these bills? Is there something that a tool, a trick, or resource, or is just something that you could advise?
Well, one thing, there's such a thing as like a hardship, obviously. Um, Whether it was through phone or letter, you can attempt to put together a letter explaining the situation. In not specifically your situation exactly, but I've had hardship letters and phone calls at least pause interest. I can't say that they would take off balances of lines of credit or change the circumstances of the loan. But the way I do it is basically it doesn't hurt to ask. And sometimes you ask and you get a no. And I've literally dialed the same number again and got a different person on the phone and got a different result. But a hardship, freezing interest, closing accounts, asking for a settlement for less than the full value, those are things that work. It just again, it depends who you talk to and what kind of mood they're in, and a whole different litany of things. But that's why a letter is nice because you could send it out multiple times. Um, if you're free later, if you want to give me a call and maybe
Okay.
we could look at what you're talking about
Okay.
and I could give you like specific advice. I don't know if you're comfortable and you want to do that,
Yeah. No,
but
I
uh, but I'd
really appreciate
I'd
it.
make the time. I'd make the time.
Thank you very
It'll
much.
probably be easier too, because without specifics
Right.
of what kind of accounts and what the balance is, or not his personal with the illness, but more or less the financial what we're working on.
Right.
There's different
Absolutely.
ways to attack it, from a credit card to a car loan to a mortgage. There's different people and ways to look at it when you're trying to find some kind of result like that.
Okay. Well, thank you so much for your time. I appreciate it. And I saw your Instagram, nice logo, and thank you. Much appreciated.
Thank you.
Nice to meet the
Thank
good
you.
ones, the nice people that are actually, good energy and comfortable. I feel comfortable talking to you, and I appreciate the most. So thank you.
I appreciate that. Like that is my goal. Like
Yeah, I don't think,
I
and
really
I don't
do.
want to say this the wrong way, but you're not a jerk. And I don't mean to say it like that. I'm so sorry, but I make so many
I
phone
deal with
calls.
plenty of jerks. I know what you
Feel
mean. I
like
definitely know
everyone is
what you mean.
such a jerk. So I just want to say thank you for being the nice one to talk to, where everyone just wants to throw nothing but questions at you. So thank you. And please enjoy your day, and everyone as well. Thank you.
Thank you. I appreciate the opportunity, and definitely send me a text or a call. Within an hour I'll be wrapped up. And if you want to give me a text or a call, we'll get on the phone. And that goes with anybody else. If you don't get through on the call, just send me a text so I have something to refer to, and I'll get to you guys before the end of the day.
Okay.
Joe,
Thank you so much.
Yeah.
thank you so, so very much for staying later through all of this. And before anyone gets off the call, I just want to remind you, as soon as you log off, you're going to get a survey. Please answer the survey. Not only is it a mandate for us at the Stony Brook SBDC by our sponsor, the SBA, the Small Business Administration, but it also helps us to know what programs such as this wonderful one Joe just gave, which would help the public. So please do answer that. My contact info, if you want to make an appointment, is also there. And I'm also going to send everyone out Joe's contact info in case they didn't get it in their chat. All right, then. Joe? Oh, my gosh, an extra half an hour with us. Thank you so, so darn
All
much.
right.
And if you have any,
Standard operating procedure. Just as
you
it rolls in, we deal with it.
okay.
Right.
All right. You have a wonderful rest of your day.
I will. I'm looking forward to some calls. So feel free, give me like 15, 20 minutes. And if you like to call, just shout the call out. I answer the phone as they come in. Thank you
Okay.
so much.
Thanks. Have a great day.
Have a good one, guys. Thank you so much.
Bye bye.